Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Welcome to the next episode of Crypto for Advisors podcast by Synergist, and I am delighted to have Kane Bisogni with me here once more. Kane is the head of research from one of the world's leading crypto brokers, Uptrade, and what makes them one of the leading crypto firms in the world is the quality of their research, and that's Kane's job. So Kane is their head of research, leads up that team. Kane, how are you today?
Yeah, good. Thanks. Thanks for pumping up the tires as well. It's always good. Been really good. It's been a pretty volatile couple of weeks, so really keen to get into this.
All right. Well, let's do it. All right. So I figured we'll go through three topics as usual today. I think we talk around the bearish sentiment, the bullish sentiment, and then maybe wrap up with a bit of information about stablecoins, if that's okay.
Yeah, sounds great.
All right. So look, normally in crypto, right, there's a fairly clear narrative that's coming out or sentiment in the market. It's, there's a bearish sort of mood or a bullish mood. It just seems at the moment we've got these major drivers of bullish sentiment and major drivers of bearish sentiment all impacting on the market at the same time. And the crypto market just doesn't seem to know where to go. How are you seeing it?
Yeah, I think that there are so many bullish and bearish catalysts at the moment. One in particular was the Bitcoin strategic reserve that we just recently got announced, with a few other assets kind of in the talks as well, but Bitcoin in particular. That was the biggest one that we've all been waiting for. And actually, I think it caught a lot of people off guard, because myself, I thought it was probably a few months down the track, but they've pulled the gun pretty early. And we saw a bit of a pump and then a bit of a dump after that, a bit of a sell the news event, as we often see in crypto. And then, as you said, the bearish catalysts or the bearish news in the market around tariffs still remain. A global recession maybe on the cards as well, just through this tariff war and the geopolitical tension behind, different countries as well.
Wow, yeah, a lot to unpack. All right, so let's maybe start with the bad news, and then we can go into the good news. All right. The bad news or the bearish sentiment that we've got there, you mentioned, the possibility of global recession. Trump, it's really all about Trump at the moment, and he really is driving a new global order, economic order, with his tariffs and a whole raft of changes that he's driving in. And that's creating a lot of volatility, uncertainty. I think it was yesterday he was on Fox News. They asked him if it was likely to result in a recession, and he didn't say no. And that was the reason why we're recording this on Wednesday the 12th. So on the 11th, the market really took a dive because he didn't deny recession. It does seem like the tariffs are going to trigger pain, that there's going to be a period of adjustment that he keeps talking about. Scott Besant keeps talking about. How much pain do you think it's going to be? Do you think it's a sustained recession? Do you think it's just an adjustment period? What are your thoughts on those macro factors?
Yeah, so it's a good question. I think that it's hard to tell, because obviously we're still pretty early on with all the tariffs introduced and how that's actually going to affect the global markets. We did see a massive sell-off yesterday around even equities having massive 5% drops in certain stocks and things like that. So it's not just the crypto market that's reacting to these, it's the global markets. And I think I was looking at poly markets the other day. It looked like we were at around a 40% chance of a recession. That's what people are currently putting in as the odds. I think that was 20% at the start of March. So in the last 12 days, we've had a 20% increase of that actually occurring. But yeah, I definitely think that we've still got a bit of unpacking to do before we get, to any decisive
Yep.
point. Yeah.
Yeah, Polymarket is interesting. That for the people who don't know, Polymarket is an online, I guess, odds or betting sort of platform where you can place bets on the likelihood of certain scenarios happening, like winning elections, etc. And it's been quite accurate as far as predicting things like the US presidential election. However, I think Polymarket a week ago was saying that there was only about a 40% chance or 35% chance of a strategic Bitcoin reserve being formed. And I think that Trump is just really hard to predict. I think a lot of people are questioning whether Trump even knows what he's going to do the next day. So it's very hard to predict that in the market, isn't it?
100%. Definitely.
I've been reading or listening to a few influencers online. I think Raoul Pal first started talking about this, who's a famous Bitcoiner, and then also Anthony Pompliano, who is quite an influential podcaster in this space as well. I've been talking about potentially Trump might be deliberately crashing the markets a bit to create a recession because that'll lower the 10-year bond yields. And that's important because in 6 months' time, there's $9.2 trillion of debt that's up for refinancing. And that's all sort of anchored off that 10-year bond yield rate. Do you think there's anything in that, or do you think that's just conspiracy theory?
I think it is a bit of conspiracy, to be honest. Like, a lot of speculation comes when things start going down. People are trying to find reasons why markets might crash, and it does make sense that people can make that correlation because, as everyone knows, when markets crash, everyone wants to flee to bonds, and the inverse relationship between bond prices and yields, when those increase, yields come down. And that's why we expect that, the refinancing for their debt would be of their interest, the US. So I don't think they're doing it on purpose, but a lot of people can speculate that, and who knows what goes through Trump's head, to be honest.
It is a massive driver for them. I mean, I think that if you look at the interest rate as a percentage of GDP, for most countries, like Australia, I think is probably about 1.4% or something. The interest on our debt versus our GDP, it's 4.6% for the US. So this is a material economic impact, and obviously the key reason that Trump's been putting out there for going through all this tariff, etc. So I think that it's got to be definitely top of mind for Trump and his administration, and when you think about it from a political point of view, most politicians kind of realize that they've got 6 months where they can blame their predecessor. So and so you want to bring the bad news and the pain in as early as you can in your tenure. And the primaries are due in are 2 years in for in the US. So Trump's only got 2 years before he potentially loses control of both houses, which is going to really impact his ability to drive through these massive changes that he's pushing. So it's not a 4-year term; it's a 2-year window, really, that he's aiming for. That he's got to have results. So, kind of makes sense that he wants to get the pain in as early as possible. Helps the refinancing of the debt, but it also gives him a runway to start seeing uplift in economic factors and the market, right?
Yeah, it is true. I think it'll be interesting to see how that actually does play out, for sure, because if we do see the yields start to decrease and then refinance it, then it's like, oh, okay, maybe there is something to this. But yeah, I always like to say that it's easy to like look into the future and speculate on something until it actually happens, because it's usually like a lot more clear on the day it happens.
Yeah, absolutely. And the market in crypto tends to, price in the potential upsides early, by the rumor kind of thing. But then when the bearish things happen, it tends to price it in immediately on because they tend to pop out of the blue. And so we have those sharp drops that we've been seeing. But maybe let's flip across to the good news, right? Because he just delivered on one of his key election promises, which he promised to all the crypto community, saying he's going to create a strategic Bitcoin reserve. And you know, I certainly have been saying the whole way through, this is going to send Bitcoin to the moon. Everyone's going to jump on board, and it hasn't. So I kind of feel a bit foolish.
I think, yeah, it's a lot of people probably were expecting it to be a little bit more bullish the way it was announced. They've only announced that their current 200,000 Bitcoin that they've have in their reserve. They're using that as their reserve, which is actually Bitcoin that they've confiscated in the past and things like that. So they haven't announced any roadmap around buying extra Bitcoin yet. So that's the buying pressure that I think a lot of investors were hoping for, that would, you know, start to ramp up the market, but they haven't actually announced any plans to buy yet. I think once they announce like a bit of a roadmap behind that, that's where we'll start to see that big movement. But yeah, I think a little bit of disappointment behind the announcement. I think in general is very bullish. I think Trump also did have a bit of a strange tone when he was announcing it, saying, you know, I did promise this, yes, and like he was kind of like, it didn't seem like he really was too involved in the decision at least. So yeah, it's an interesting one, but I think in the long term it will play out very well.
Yeah, I think that's the key here. I mean, you know, my initial reaction was similar to you. It was like, oh, he's kind of like doing the bare minimum that he thinks he can do. But he was doing it a lot earlier than what everyone expected. So it felt like he was trying to distract people from the other things that were blowing up around him at the time and just change the narrative in the market a bit by coming out with this announcement and hastily pulling together those summit. But and you're right. He sort of said, you know, we're going to do it, but we're not going to invest any more money. What he did say, though, was that he was asking the Treasury Secretary to come up with ways that that they could acquire more Bitcoin in a way that wasn't costing the taxpayer money. I think the sentiment was really quite negative about that, like, oh, well, you're just going to magic it up. But there's actually a myriad of ways that they can do that, right? I mean, they're constantly confiscating huge sums of money from criminal syndicates and all the rest of it. That could be used. They could sell off some of their gold supply and put it in and turn physical gold into digital gold. There's a myriad of ways which they could do it. And if you think of David Sachs, you know, he seems like a pretty entrepreneurial kind of guy who'd be, you know, quite adept at looking at those ways, right?
Yeah, I think as you said, there are so many different ways they could do that without the taxpayers actually having to spend or you know, contribute to it. So I think one of the big ways that a lot of people were speaking about was the one you said around gold, at least liquidating a bit of their gold reserve to put into Bitcoin. Which does make sense because I guess it kind of diversifies their store of value proposition for both of them, because David Sachs did say that they are both a store of value. So if you're going to be, you know, having both of these, it makes sense to, you know, diversify a little bit of your gold reserve, maybe to buy a bit more Bitcoin.
Yeah. And the big news here is that the key benefit of doing this has been realized, which is it's legitimized Bitcoin as digital gold, as a long-term store of value. So the biggest detraction that the skeptics have always voiced is it could be worth nothing tomorrow. It could all just blow up and be worth nothing. This legitimizes it as a Class A asset, that a store of value worthy of, you know, equivalent to physical gold. So, you know, I think that'll sink in, and the market has to react to that. I really don't feel the market has taken that into consideration yet.
Yeah, 100%. It's been, it's one of those assets that are now matured into this position where, yeah, it just really can't be ignored. It's, you know, it's proved the test of time. which was one that a lot of people were wondering if it would, because as assets mature, as they last longer over time, they often, have a lot longer chance of survival. So Bitcoin has done that. It's now about close to 15 years old now. So with that comes the higher probability that this is actually going to be a mature asset that's going to be, strongly adopted into our financial system.
Right. One other thing that you and I have been watching and talking about since the start of this year is not just the federal strategic Bitcoin reserve, but the states and what they're doing as well in America. And I think we first started counting how many states were introducing legislation into their state bodies around strategic Bitcoin reserves back when there were, I think, 3 or 4 of them back in early January. And then every week they keep growing and growing and growing. Do you know where we're up to now?
I don't know. I think I was going to roughly say about 25 or 27 still. I don't know if we've actually introduced anymore.
Yeah, so there's 33 strategic Bitcoin reserves introduced across 23 states. So 23 states, you're on the money. But we've actually even progressed, and I think there's a few which are now through. So these are all states in America which are saying, well, we're not going to wait. We're going to introduce our own strategic Bitcoin reserve. The last thing on this one is one thing that I was quite worried about when Trump, fired off some comments about 2 weeks ago, was it seemed like he was introducing a bunch of other digital assets into the strategic reserve. I think, my view on that was that would have been a really bad mistake because the strategic reserve is strategic. It's a store of value for long term, whereas all these other digital assets are speculation, But they've separated that out. They've got the strategic Bitcoin reserve and then the digital asset stockpile. What about the digital asset stockpile? Do you think that will have an impact on the market?
I think it definitely will have an impact if they do start to adopt and buy these assets that they were speaking about. A few of these are like Ethereum, Solana, Cardano, and XRP. Those were the main ones that were actually spoken about. And, if the government are going to actually start to buy and introduce those, I don't see why that wouldn't have a broader impact on our markets in a bullish way. It is a bit interesting in the way they've chosen the assets, at least the ones that Trump mentioned. I think ETH and Solana make a lot of sense. And then you've got XRP and Cardano, which are both US based as well. Yep. So maybe feeding into, that earlier promise around maybe tax exemptions and innovation between US blockchain companies as well.
Yep. I think the other element to that could be that it's just what they had as well. I mean, they've acquired a bunch of these coins through confiscations and like Bitcoin. So it's not just Bitcoin they hold. So it could be things that they've got on their balance sheet already. And then also, there could be a bit of a political quid pro quo going on there as well, potentially. But we won't get into that. All right, great. That's the bullish sentiment covered. The last thing I wanted to ask you about is stablecoins. So a lot of our followers might not know that much about what stablecoins are, but they've been top of mind for Trump's administration. They're all very, very firm that stablecoins are going to be a legitimate part of the US financial system and play a big part in strengthening the dollar globally, the US dollar globally as well. And that's been also reflected across other jurisdictions like Thailand overnight, just approved Tether, one of the leading, probably the biggest US stablecoin, as an official currency as well. Can you describe what stablecoins are and what impact you think they are likely to have in the next few years in our global financial system?
Yeah, definitely. So in simple terms, a stablecoin is actually just a digital currency that is backed one-to-one to fiat currency. So we have USDT, which is Tether, which is one-to-one back to the US dollar. So basically, it means that you've got $1 in USDT, it equates exactly to the $1 you would have in your USD. And what they really are the backbone and foundation of the crypto economy, because without these pricing and swapping and things like that, the economy doesn't run as efficiently. And we've seen that over the past few years, stablecoins are becoming more readily adopted and strengthening the economy in general. So they're being used for different financial services, DeFi services, to lend, borrow, also to participate in different financial activities. And we've seen that, as you said, the US government are actually speculating that the stablecoins could be a really, really strong model for the current financial system. And they actually see stablecoins as something that will only boost the US dollar and not actually act as something negative to the dollar. And that's something David Sachs said, and they've actually put their full support into stable coins and the adoption of stable coins. I think it becomes more readily available for a lot of different countries and investors who want to explore adopting or investing into USD. They can simply do it through stable coins as well. So I think in the next few years, it will definitely have a massive impact. I think the adoption is going to be a lot stronger. And as you said, it's being in a crypto market, these are more decentralized ways and faster ways to process transactions and things like that. So yeah, I think it's definitely makes a lot of difference in the current system we have.
Yeah, it's huge difference when you think about it, because not only it effectively means you can choose a fiat currency, US dollars, for example, move it wherever you want around the world instantly at very little cost, and not through a centralized, controlled process. It changes the dynamic considerably. Things like, for example, you think at the moment with Russia being blocked out of SWIFT, which is otherwise what you would have to use if you're moving US dollars around the world globally between countries. And it blocked out of that through sanctions because of the Ukraine war. Did they lose control of that then because it's decentralized? Anyone can just start moving US dollars around with little governance, little oversight?
I think that they will obviously lose a lot of control of how that can be sent. Obviously, just because when it's been transacted on a decentralized network like something like Ethereum, obviously you don't have the ability to stop transactions going through. You can track them through the transparency behind the blockchain, which is another big thing. But I think the whole point of this is the fact that if you wanted to send $1 million to your friend overseas, that would become a massive issue. It's almost, impossible to get that done in a day or 2 days or even a week. This way you can send $1 million to someone and have it into their account in 10 minutes.
Right. Well, I wish I had $1 million to send to a friend, but that's not going to happen. Maybe it will come back the other way. That'd be nice. Look, massive changes, right? And you can really see how this is going to dramatically impact our financial systems in years to come. I've always thought we're probably 5 years away from getting these changes coming through. But look, if Trump keeps pushing it as aggressively as he is, and the regulation comes out in August, I think it's due, the new regulatory framework in the US for cryptocurrencies, that could really accelerate that quite dramatically, couldn't it?
Yeah, definitely. I think that a timeline's very hard in crypto world because, as a lot of people say, 6 months in crypto feels like 5 years in the stock market. And, being such a strongly adapting environment and fast moving pace, like things change very quickly. So I wouldn't be surprised if, things can change in the next 2 years instead of 5 years. It's one that we just gonna have to continue to adapt to.
Fantastic. All right. Well, look, I think we're over time, Kane. So I'll let you go. I know you're super busy. Yeah, crypto's on sale at the moment, so everyone probably wants some. So I hope business is going well at Uptrade, and I look forward to chatting to you again in 2 or 3 weeks.
Yeah, definitely. Thanks for having me. It was good to have a chat and break down what's happened in the market.
Right. I'll add some a little note at the end here for our followers to be able to subscribe to your Uptrade Alpha research a Patreon site, and so they can follow along and hear what you have to say on a regular basis.
Yeah, definitely. Get in there.
All right. Great. Thanks, Kane.
All right. Thanks, Andrew. Bye.
Bye. This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.